Thank you. Well, we've got economists, actuaries, politicians, accountants. Well, let's not forget the people. One of the reasons I ran for Congress, motivated by a great firm, Arthur Andersen. I spent 22 years of my life at Arthur Andersen. And let's not forget that Chuck Bowser came out of Arthur Andersen, David Walker came out of Arthur Andersen, I came out of Arthur Andersen. The firm had a tremendous...
And after that, it just...
Well, that's one of the problems. And by the way, that's prosecutorial hubris when you have people going after a firm with 50,000 employees when they could have gone after 3 partners in Houston for Enron, and then it goes to the Supreme Court and wins 9-0, but the firm's reputation was killed. Yeah. That happens to individuals, by the way, as well as firms. And there's a lesson to be learned in that. That's not for this session, but let me remind you of the greatness of this firm. Because it not only spawned great people, it spawned great ideas. And I want to remind you where you came from. The FASAB was formed as a result of the bill that I introduced in Congress twice. In 1986 and 1987, President Bush signed the law, and because we saw in Arthur Andersen, before it came to Congress, a need for generally accepted accounting principles at the federal level. And I didn't understand that we would have a separate FASAB to do that, but we understood there needed to be a bigger focus for that. Now, one of the things that happened that induced me to make that great decision to leave the firm, not knowing I could be elected, by the way, and when you're in an accounting firm, you have to leave before you run, otherwise the public thinks that you're now being supported by the firm, and you know the independence that these firms have. So I left, and thank God I was lucky enough to win as a Republican in the Democratic district. I tell many of my friends I was the accidental congressman, because if my party knew I would win, they wouldn't put me up. I was a sacrificial lamb. And I fooled them by winning. But now I'm here with 4 years of great experience in Congress on the Banking Committee and the Government Operations Committee. They've changed the name somewhat. But before that, I was one of the partners on a team led by Harvey Kaplan that was hired by the Treasury Department to undo the books or to redo the books of New York City so that the Treasury Department would feel comfortable in bailing New York City out. And once we did that, I guess it was Felix Rohatyn that was running it at the time. I think we still need him today, by the way. Once we did that, Mr. Kapnick was smart enough, following the footsteps of Mr. Spacek, who built the firm. I'm going to quote something from him. His 250 speeches over 20 years put in this book. We decided that why not take this team of partners, including me and Mr. Mort Eagle, who had a lot to do with the publication of these books. Just had dinner with him last week, one of our great partners, and see if we can piece together the financial statements of the United States of America. So the firm, on its own nickel, prepared consolidated financial statements of the United States of America and published it in this book in 1975, Sound Financial Reporting in the Public Sector. It followed up in the next year, Sound Financial Management in the Public Sector, 75, 76. The firm did that for, I guess, 5 years and then turned it over to the Treasury. And this became a prototype statement then prepared by the Treasury. And today, you have it. Okay. And by the way, I came down a day early yesterday so I could read. Thanks to Wendy, I got a hard copy of the financial statements of the United States of America, and I did read this yesterday. And let me tell you, we need a better format, as David Walker said. But when you think about the exercise this firm went through, and then you think about the Treasury picking it up, and now I'm reading this statement, and the first thing that hits me is we don't have a liability for Social Security on the books. Now, when I asked one of your staff, because I couldn't understand, I can understand that, all right, we didn't want to project the 54 or 55 trillion. I still believe there has to be a liability. I'll tell you why in a minute. And I'll quote from Arthur Andersen when we prepared this book. But I couldn't understand, well, why didn't we put the non-public debt on? And the answer to me was, well, we used consolidated principles, and therefore we eliminated that 4-point-something trillion in consolidation, the liability and the trust fund. I said, boy, is that a silly answer? I'm not castigating the staff, but I'm saying that doesn't meet common sense or fiscal reality. You have to have at least the bonded debt even though a big part of it is public, on the books of the United States of America. And if you have to do it by calling it deferred income, so be it. You belong to country clubs and private clubs. You pay your dues in advance. They can't put that in income. They have to set it aside to match those revenues against the expenditures. I mean, that's a simple accounting principle. Why anybody would say that that shouldn't apply to this is beyond me. But let me give you the answer that Arthur Anderson had in insisting, this is 1975, why they put the full accrual for Social Security on the books. And by the way, if you don't have these, I'd be pleased to make copies and send them back down to you, because I think there's a lot here that great minds have come up with. I was only a younger partner at the time, but I learned a lot at the knee of Leonard Spacek and what's his name, Harvey Kapnick and Ward Eagle. And here is note 13, accrued Social Security, to the prototype statement, Consolidated Financial Statements of America. And by the way, I did come here to speak mainly about fiscal sustainability, but this seems to be getting a lot of your attention. I figured let me lead off with this. An accrual for Social Security benefits is reflected in the accompanying financial statement because it appears that such benefits could not be terminated or substantially curtailed without serious social and political implications. Social Security receipts and disbursements are also included in the unified budget. Further, in principle, the consolidated financial statements and the accumulated deficit should reflect a liability for the amount of future benefits that will not be covered by future contributions under present law. Under this principle, inclusion of an accrual would seem to be both proper and required. It is recognized that the Social Security Act states that payments should be made only to the extent of the trust funds, and that covered individuals who have not contributed to the fund have no contractual right to receive benefits. However, this does not negate the need to accrue a liability. I could go on and give you what the compromise was and how they decided to put it on in a staged way. But I think this is a very important issue. The other important issue is the 800-pound gorilla that's not in this room. It's over there in Congress, and it's over there in the Treasury Department. And you are, in effect, a hostage to that. Because this organization, unlike the proposal I had in my bill, is now funded by some of the people who have a conflict of interest in the things that we are doing here today. Treasury Department, I understand, gives you 25% of your budget. Congress with CBO gives you 25, and there's another 2 entities. I'm not saying that that is wrong, but there is a perception that the rules that you are making here could be influenced if one of those bodies did not like the end result. And I saw that firsthand, because when I came up with the concept of a chief financial officer, which evolved starting with the accounting profession, because it had emerged from Arthur Anderson and was discussed in a committee with several others, and I brought it to Congress, there was an intention that the CFO would not be subject to politics, that the CFO, not just the deputies, would be extremely qualified individuals, and the CFO would not be part of the Treasury Department, would not be part of Congress, but would act in a separate way, whether it's something like David Walker, a 15-year term, not coterminous with anybody's election, or something like the Fed, where accounting would be divorced from politics once and for all. And that concept was first exposed by Leonard Spacek in one of his 250 speeches, where he saw the need for this concept in the private sector when companies were trying to game the system and picking alternative accounting principles, whether it be depreciation, the way in those days they accounted for the investment tax credit. Some took it in income, some didn't. And he said the only answer is an accounting court. We must come up with a body that is going to take away the promulgation of accounting principles and standards from the people who are in conflict with that. I come here today, not to tell you this is my final stop, this is my first stop. I am now the spokesman, 20 years after leaving Congress, for Truth in Government. That's what I do as a volunteer. You might say, how do I make a living? I'm on the boards of private companies that are preparing to go public, so I do make a living as a CPA. But I spent 22 years in Arthur Anderson, 4 years in Congress, and now 20 years as a public advocate for fiscal responsibility, and decided to write a book that would knock people off their seats. This was not an easy book to write, and I used somewhat exaggerated and outrageous terms, because if we can't get the people to do something about what's happening, all your work is for naught. What you're doing that's most valuable is you're trying to give information to the most important constituency of all, the people. And why is that important? Because unless they get informed, and unless they get motivated, and in some cases angry, you're not going to get the changes we need to stop the tsunami that is being created right now that will dwarf the next generations. I've listened to the economists, and they can talk all they want about the economic terms. You got to go back to accounting.